Hey guys, Vince here. Here is my February 2025 North American trucking and supply chain market update for you. So there's a lot of topics, a lot of buzzwords, a lot of news stories that I want to quickly cover, and I'll just run through them. So in February, the North American trucking and supply chain landscape is definitely navigating a complex mix of stabilization and uncertainty. So there has been a slight uptick in the load to truck ratio. The numerical figure that people like to throw around and that has been kind of analyzed is 7.8 loads for every available truck as a generic comparison in the North American marketplace. That is up about 1.6 loads to trucks in comparison to the same date in 2024. The increase is reflective, obviously, of a post-holiday rebalancing, some preemptive inventory stocking by shippers because of these potential tariffs that everybody, and I mean everybody, is talking about, which was announced earlier in the year. However, it's important to note freight volumes are still below historical averages, and they're constrained by cautious consumer spending and ongoing inventory management adjustments by some of our clients. So trucking capacity is still a slow rebalancing act. Spot rates have seen a slight dip in February. However, it's very, very regionalized. Like there are certain areas, I know the Ontario marketplace has been killed in the spot market the past 2 weeks. Driver availability, the imposing tariffs, the threat of the looming tariffs starting early March was a huge factor. The volatility in terms of weather disruptions, another massive factor. So we're playing this balancing act in certain areas where other areas have seen less of an impact. Now, trucking companies in itself have been facing pressure from expanding private fleets, which are capturing more market share. They're capturing more market share because there's companies that are simply going out of business. Small carriers struggle with tight margins, high operational costs. I know that's something that we're all dealing with, but as a tighter market emerges, I think we're going to see demand pick up later in 2025. When nobody has the crystal ball, if anybody tells you they do, they're lying to you. On the supply chain front, February has highlighted the lingering effects of the trade policy shifts. The Trump administration proposing tariffs on Canada, Mexico, China. It was announced early February that it was going to be paused for 30 days. This past week and the week prior, everybody was weary about March 2nd, March 1st, the beginning of March, about these imposing tariffs. What we've seen and what I've seen personally, shippers are adjusting strategies with some pulling forward imports to potential cost hikes. So what they're trying to do is get things across the border in a timely fashion, help avoid some of these 25% tariffs that are trying to be imposed. However, there hasn't been really any significant bottleneck outside of some few price and regionalized price jumps. But it was announced yesterday that the 25% tariffs have been moved to April 2nd. And I'm sure we're gonna all do the same song and dance in about 20 days. Cross-border freight flows, particularly with Mexico, remain critical, bolstered by nearshoring trends and infrastructure investments. However, a strong the US dollar is very strong right now, and it is dampening a lot of export activity, and it's challenging some of our manufacturing-related freight. Lastly, weather. Record snowfall in the southeast. Toronto, I don't think has seen as much snow specifically. That's where I'm from. In a very long time. We've dealt with wildfires in the LA area. These instances continue to test supply chain resistance and cause localized trucking delays and rate spikes. But another factor that we see is warehouse costs in general are also very elevated with no immediate relief in sight. With limited new construction and e-commerce demand continuing to soar and be the next push in supply chain. So all in all, looking forward to 2025. It sets the stage for a lot of cautious optimism. I would anticipate a gradual freight recovery, probably gradual rise in rates throughout the second half of the year. Tariffs are going to be still a huge conversation piece. Regulatory changes, economic moderation, the geopolitical risks that are at play will keep the market pretty dynamic. Again, I say this every video, and I'll continue to say it again. It's so important that we partner with good clients, and clients partner with good carriers that can weather these storms and be able to create win-win scenarios together. So appreciate you guys listening. Thanks for listening in on February, and see you next month. Take care. Bye.